بسم الله الرحمن الرحيم. We will continue chapter 5, accounting for merchandising operation. We did already studied perpetual system. Periodic system uses separated accounts
And we now will
for
continue
each
the periodic
purchase
system.
transactions, such as purchases, freight cost, return and allowance, discount. When we are using perpetual system, we used inventory account for each purchase transaction. But when you are using periodic system, you use a separated account for each transaction. Company, according to periodic system, does not maintain a running account of a change in inventory. We don't have an running account for inventory. We just have beginning inventory and ending inventory. And ending inventory determined only by physical count at the end of each accounting period. So we have to calculate the cost of goods sold at the end of each accounting period. Not like the perpetual system, we have inventory account. We can determine the ending inventory at any time from the T account we have, and we know exactly the cost of goods sold. So we need to calculate the cost of goods sold. Cost of goods sold. It is as follows. Beginning inventory at January 1st, plus net purchases. Net purchases equal purchases minus purchase return and allowance and purchase discount. Purchase return and allowance, purchase discount, it is the opposite of the purchases. So we deduct purchase return and allowance and purchase discount from the purchases to determine the net purchases. But we have to add the freight in or transportation in cost to calculate the cost of goods purchased. So the cost of goods purchased equal purchases minus purchase return and allowance, purchase discount, add plus freight in. Inventory at January 1st, or the beginning inventory, plus cost of goods purchased equal cost of goods available for sale. If you have inventory 36,000 and you have net purchases 307 and 800 and you have freight in cost 12,200, so the cost of goods purchases 320,000. So the cost of goods available for sale will be 356,000. But you have inventory at the end of the fiscal year or the end of the period from the physical count, such as here 40. So your cost of goods sold is 316. So the cost of goods sold equal beginning inventory plus cost of goods purchased minus ending inventory. You will do this just at the end of the period. Let's working on the recording of the transaction under periodic system. Let's start with purchases. Assume that the company ordered from supplier PW Audio Supply SAUK stereo record purchases 3,800. How we can record the purchases of 3,800? According to perpetual, we call it inventory. Here we call it purchases. So we will get 3,800 goods from our supplier. We called it purchases. So purchases will be debit to 3,800. Why debit? Because it is a kind of expenses. Expenses is debit nature. These purchases was on account, so accounts payable. So the entry will be purchases debit 3,800, credit accounts payable 3,800. What about the freight cost? The company paid $150 for freight charges on its purchases. The entry will be, according to the perpetual, we used inventory. Here we use freight cost. Yes, freight in or transportation in, debit 150 because it is expenses, debit nature, and we paid cash, so the credit will be, yes, cash. What about the purchase return and allowance? Purchase return and allowance, it is the opposite of the purchase. Purchase is debit nature, so the purchase return and allowance will be credit nature. But realized, if you purchase cash, your purchase return and allowance will be cash. If you purchase on credit, your purchase return and allowance must be on credit too. Here we are doing purchase return and allowance according to a credit purchase, so it will be accounts payable. Our accounts payable will decrease by 300 returned goods, and we have purchase return and allowance credit because it is the opposite of the purchase. What about the purchase discount? Purchase discount, we have a very small problem. How to determine the amount you have to pay? It is according to the discount period. If you use term like 210 and 30, that means if you pay during 10 days, you will get cash discount 2%. You have two options. One is to pay during the discount period 10 days, so you will get the discount, or you can pay after the 10 days. In this case, you will lose the discount. Here, assume that we will pay during the 10 days and we get taking 2% cash discount. How we can calculate the amount paid? Like this. First, you have to determine the due amount. Due amount is the purchases minus purchase return and allowance. Yes, 3,800 minus 300 equals 3,500. It is the due amount on the company. But you paid during the 10 days, so you have a discount. The due amount 3,500 times 2% equals 70, because you are during the discount period. So the amount you have to pay is 3,430, and your entry will be as follow. Yes, you will pay accounts payable by the due amount 3,500, and you will get a purchase discount credit because it is the opposite of the purchase. It is as revenue. It is not a revenue, but deducting of the cost, decreasing of the expenses as revenue. We can call it as revenue, but it is not a revenue. It is deducting of the cost, declining of the cost. So the purchase discount opposite of the purchase, so it is credit, and you will pay, yes, cash 3,430. What about the sales under periodic system? Under perpetual, we used to do, yes, two entries, one for the sales and one for the cost of goods sold. Here we can't do the entry for the cost of goods sold and the inventory. Why? Because we can't determine the cost of goods sold after each sales transaction. We only do that at the end of the period, and we don't have a running account for inventory. So we only have one entry only for the sales will be accounts receivable if the sales on credit, or cash if the sales cash. But here the sales on credit, so we used accounts receivable 3,800 and sales credit because it is a revenue, credit nature, 3,800, and it is the only entry we have. We don't have other entry, so no entry is required for cost of goods sold at the time of the sale under a periodic system. It is only under perpetual. You have to make two entries. Here you just make one entry. What about the sales return and allowance? Sales return and allowance, it is the opposite of the sales. Sales was credit, so the sales return and allowance must be debit. So it will be sales return and allowance debit 300. Do not forget, if your sales cash, sales return and allowance cash. If your sales credit, your sales return and allowance credit, right? Here we was on credit, so the sales return allowance debit and accounts receivable credit. Our receivable amount will be decreased by the returns. What about the sales discount? We can calculate the sales discount as we did as purchase discount. Exactly. Except one thing. Due amount sales minus sales return and allowance. Discount, if you are in the discount period, so it is minus 70. The amount to be received, yes, the difference is here. The amount to be received when you are sale, when you are purchase, it will be the amount to be paid. So here we will receive 3,430 cash, so the entry will be cash debit 3,430, and you will have sales discount 70. Here sales discount is debit. Why is debit? Because it is the opposite of the sales credit, so the sales discount is debit, and accounts receivable is 3,500. Okay, what about the comparison of entries between perpetual and periodic? When you are using perpetual inventory system, you used inventory with all the purchases transaction. When you are purchase a merchandise, debit inventory. When you are making freight and cost, debit inventory. When you are making purchase return and allowance, credit inventory. When you are payment on account with a discount, your discount will credit inventory. But when you are using a periodic inventory system, you have to use the name of the transaction instead of inventory. How that? When you are purchasing, use purchase. When you are make freight cost, use freight in. When you are making purchase return and allowance, use purchase return and allowance. And when you are pay on account with a discount, use purchase discount to record your discount. So the main difference between periodic and perpetual, it is the name of the account of that purchase transaction. Under perpetual, use only merchandise inventory with all the transactions. But when you are using periodic, use the original name of the transaction. What about the sales? Purchase return and allowance. When you are using perpetual inventory, you have to make two entries. One for the sales revenue and one for the cost of goods sold. Sales revenue with the sales price, cost of goods sold with the cost. Realize that the sales price must be greater than the cost to make a profit. But when you are using a periodic inventory system, you can't make entry for the cost of goods sold. Why? Because I can't determine it after each sales transaction. I only can determine it at the end of the accounting period. So I have one entry only for the sales, accounts receivable and sales, and no entry for cost of goods sold. The same with return of merchandise sold. You have two entries under perpetual, one for the amount of the sales price of the returned and one of its cost. But under periodic, you only have the sales return and the allowance, sales price, and the accounts receivable entry, and no entry for the cost of goods sold. But realize, no difference between the cash received on account with a discount under perpetual or under periodic. It is the same. You do not change the name of the sales discount under perpetual or under periodic. It is only with purchases. But under sales transaction, sales discount, use it under perpetual, and sales discount, use it under periodic. So it is the same recording for the two transactions. I hope you will be safe and your family, and I hope you can understand online. Sure, I missed to be face to face with you, but according to circumstances, يعني ربنا يفك الغمة إن شاء الله، ونرجع تاني نشوفكم ونطمن عليكم وتبقوا قدامنا كده ونفرح بيكم حتى بشقاوتكم يعني. Please, from the attached word file, make your homework, exercise 518, 519, 57. See you in safe إن شاء الله. السلام عليكم.